Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, today I have Brett Swarts on the line, and he's a founder and CEO over at Capital Gains Tax Solutions. Brett, welcome to the show.
Adam, grateful to be here. Thank you for having me.
All right, so we got a lot to talk about today. So we're going to get into the deferred sales trust strategies and what those are for those that don't know and how you're using them to help defer capital gains taxes. And I want to get into that. And also some of that, I've had these conversations in the past when it came to things like real estate and maybe some other assets like that. But I haven't had a conversation on some of the things like maybe Bitcoin and if that applies to using these types of trust strategies for deferring capital gains. So we're going to get into that and more. But before we do, how'd you get into this business? I'm curious. How'd you get into this business? It's interesting.
Yeah, I grew up in California, mostly in the Bay Area, helping my parents buy and sell property at a young age, build it mostly actually, and then actually started to help people at Marcus and Millichap buy and sell multifamily property. And the 2008 crash hit, and clients, friends, family lost all of their wealth or a lot of their wealth, and mainly due because of the poor decisions a lot of people made with 1031 exchanges and or just not selling at the proper time due to capital gains tax, not having a good solution for that beyond a 1031 exchange. And that's when we discovered the strategy we're going to talk about and how it works and why it can really transform the wealth building machine for most real estate entrepreneurs or even just business entrepreneurs or even now Bitcoin people who really have made it a big gain in their holdings.
So I want to go back. And how long have you been in this business, by the way, just roughly?
2006 is when I started at Marcus and Millichap.
So we're going up 20 years there. Oh, my gosh. Doesn't time fly?
Fast.
You're like, oh man, why'd you date me? Well, I'm just saying, man, that's when you get to that age and you start to say, you had college buddies for X amount of years, right? That's funny.
Yes, exactly.
I'm there too. It's okay, Brett. It's fine. So I want to take you back there for a bit to the early days of when you were getting to know what this DST kind of really was, Deferred Sales Trust. Did anything surprise you as you were learning about the product, as you were just kind of, getting your feet wet? What surprised you about it?
Yeah, I think what was surprising is just how flexible it is compared to, again, the 1031 that's not as flexible with the 45 days to identify and 180 days to close and just how many assets you could use it with. And I think the biggest thing was as real estate, investors or people, if they're listening, we typically know when it's a high market or when things are hot. We knew when interest rates are still low that we were in multiple high years. And we're like, gosh, this thing's got to change. We knew that. And, years, we say hindsight, 3 years, 2020 vision, if you had it. Well, we really knew. And same thing kind of in 05, 06. We knew it was something gosh, this thing is just too hot for too long. And the ability to sell and be strategic with time, right? And so that'd be number one. Number two would be the truly passive income aspect of this. Most of us want to accelerate to the rich dad, poor dad, fourth quadrant on the bottom right. But most never achieve that. Most stay in the other three quadrants. And the bottom right is when money really is working for you and you're not having to trade your time for any of it, right? I call this truly passive income. I think there's a myth out there of you just get this passive income, but it's always this fleeting thing because especially in places like California where I grew up, it's just so challenging to own and operate businesses or real estate. And people want to achieve that fourth quadrant. And so just how much of an accelerator this deferred sales trust is to that fourth quadrant is the game changer. I think when most people see it, they realize it's not just a tax deferral strategy. It is a wealth building machine that unlocks truly passive income. And the last point about that is we believe that truly passive income is to your freedom and impact as compounding interest is to your money. And it's $10, $20, $30, $40, $50,000 a month, whatever it is. But if we can unlock that piece there, where you're not trading any of your time for that number, that's the game changer to just open up lots of the big domino to open up lots of freedom and lots of opportunity.
Let's take that further. So, and I guess let's start with the real estate side of things, because I want you to go deep into kind of explain how this works. But maybe before we move into Bitcoin or maybe some of the other assets, let's start with just real estate, because I feel like most people, the widest amount of audience is going to get that. Why would somebody look at one of these trusts or one of these strategies versus, let's say, the 1031 exchange or something else like that? How would they? I should say.
I love that question. Let's use actual deal story for clients that actually use this for this exact purpose. The next was in San Diego. First Sudhir and they're both clients of mine. And they built a car wash in Chula Vista. It used to be an old taco stand. And then they bought the 2 lots next door from each other and about 2 acres. And they built this cool car wash where they had a taco stand or taco restaurant inside of the car wash. And they were facing this exact point. They're like, hey, Brett, we built it for $4 million, basically all in with the land costs and the build. It's now worth $13.5 million. We're in tax reform. We're going to hit with huge tax. And they go, look, we don't want a 1031 exchange because guess what? We have to buy something for $13 million or greater. And we have, a couple $1 million of debt. We have to take on this debt. And number 3, we think it's the high part of the marketplace. And he goes, so the 1031 exchange is the opposite of what we want to do. We just made this huge gains. We just made this great decision to build all of these things, take the risk. And we don't want to, put all $13 million plus replace the debt, which is the big killer for people right now who are hurting in commercial real estate. They took on too much debt, and then the debt has reset. It's a whole other conversation here. But the point is, we looked at it and we said, here, I'm like, exactly right, guys. We don't need to take on all this. You don't have to do this. You can get out of debt. We're the opposite of that. You don't have to do any debt replacement. Oh, you don't have to buy anything for $13 million. Oh, okay. And we can build a trust with an installment sale that allows you to have flexibility for timing of investment because, like we knew from the '08 crash, it took about 3 years for the bottom of the real estate market, which we're kind of seeing it all over again, right? If you like it's taken about 3, maybe it's going to take about 4 years from the bottom of the commercial real estate market and from the peak. And so that's exactly what we executed. And so we sold, paid off all their debt, diversified. And this is the key. We put it into a lot of it real estate debt, actually, passive real estate debt funds. And that's the beauty of our strategy. We don't have to do like kind of real estate, although we put into something that's kind of like real estate. It's debt into real estate. We also put it into Bitcoin. We bought Bitcoin at a very low price, $40,000 a coin. Incredible, right? I think we're over $120,000 this week. We put it into some stocks. We dollar cost averaged, but mainly we waited and we put it into some hotel deals that went south and we bought those at some of a discount and passive real estate deals. We diversified is really what we're talking about here. But fast forward, now the marketplace is starting to actually, soften quite a bit. And there's opportunities. We can use the trust. We can partner with the trust tax deferred to buy back into these deals. And that's a game changer. Like you're not just saying, oh, I'm going to be completely passive. Like I'm no longer an entrepreneur. No, they can be an entrepreneur again, but they can do it on their terms, right? At their timing. They just have to work with a team like us to help structure it and execute it. Kind of like a self-directed IRA, Adam. And I imagine some listeners know about that. You have a traditional IRA, but you can do a self-directed IRA. This is kind of like a self-directed trust. It's kind of like a self-directed 1031 with no timing restrictions.
And so I want to juxtapose like that versus the traditional route. You were able to diversify. You were able to not purchase just because of timing and just basically the rules that you have to purchase within a certain amount of time, even though you maybe didn't have the perfect property or have the right thing you want. And you were able to really make investment decisions the way you would have if it went and still get the tax benefit. Am I off on any of that?
Precisely. Literally nailed it.
Yeah. So, and whenever I have this conversation, because this has been around, this isn't like a new strategy. It just, if you're listening to this and this is like, if you're like, well, what are these guys talking about? First off, you just heard he's been doing this for already going on 20 years. So this isn't like a new strategy. You know what I mean? But why do you feel more people don't take this route or haven't heard of it? Like, I'm always confused about that.
Yeah, absolutely. And great question. There's really 3 of the biggest myths when it comes to this. And I had to overcome these too. When I was sitting at Marcus & Millichap, we were known as maybe some of the best in the commercial real estate industry with 1031 exchanges, #1 brokerage firm for commercial real estate in the country for transactions. And I'm sitting in Sacramento and I'm learning about this for the first time. And there's like 30 of us sitting around, in this conference room. And I think I would say 28 of the guys said, this is too good to be true. I'm just going to stick with my 1031 exchange. But I said, guys, this is true. Like this is the Netflix to the Blockbuster. And so what are some of the, I'm curious enough and I'm going to be, tenacious enough to actually see what's behind the curtain, if you will, right? So the 3 biggest myths. #1, it's too good to be true. My CPA would have known about it, or I would have known about it. Why isn't everybody doing it? Why isn't my commercial broker telling me about it? All the things everyone should be doing it. Like it seems like it's just, if it's this good, if it's Netflix, right? And what they don't know is there's a 28-year track record, right? There's thousands of transactions. There's billions and billions and billions of assets sold using it. And key here, over 30 no change audits from the attorney who's my business partner that I work with. And he's the creator of this. And so compare that to the 1031 exchange. There's 5,000 QI companies across the U.S. They're all banging the drum of 1031 exchange, okay? By the way, there's people who still don't know about a 1031 exchange after, 30 years of banging the drum, right? You'd be shocked, right? Or they don't really understand the nuances.
There is. Yeah, I agree with that.
Yeah. Yeah, and so that's number one. So the legal part. So once we get through the legal part, that it's legal, it works, it's never had a failure in any of the audits. Some people get confused with another strategy that has had failures called the monetized installment sale, which is a kind of a train wreck. We steered clear of that, and there's reasons for that. But they kind of couple them together. There's even parts of the commercial real estate community, and by the way, I'm a part of that. I'm a California real estate broker by trade. Sold over $500 million in real estate. Like I love 1031 exchanges when they work out well for people. But the point is, those that don't want you to know about this, Adam, they want to keep you in the 1031 because that's all they know, and or that's just the one. They have a hammer and they have a nail, and that's all they see every single time. But it doesn't serve the baby boomer population, especially who are exiting over $100 trillion in the next 5 to 15 years, or not exiting and getting crushed with tax. It's 10,000 baby boomers turning 65 every single day, and about 80 million in the U.S. alone. So all of these things are converging, and they're having to really take a look at this for maybe the first time or take a serious look at it. That's number one. Number two, there's a trustee. Okay, I'm a third-party, unrelated trustee. You have to give up some controls, okay? And this is important. You're selling it to a trust in exchange for a promise. Just like if you send your funds to a QI company, you're giving up some controls. You're having to give up some controls here. And so that means I have to approve of the investment decisions, but so do you as the note holder if it's your deal, Adam, right? We have to fall within the parameters of basically this trust. It's going to pay you back. You will pay tax as you receive payments back. This is not avoidance. It's deferral. Okay. But these trusts can go on for as long as you want. They can pass to your kids, and you can, most clients just like to live off the cash flow of it and just keep the principal intact. And so that's number two. You have to give it some controls and work with the trustee. There's ongoing fees is the number three one. And it's about 1.5% to 2% on the trust value that's in the trust. And there's about 1.5% on one-time setup fee for the tax attorney. So the fees aren't inexpensive. A QI company for a 1031 exchange is $1,500 probably, right around there. And it's very inexpensive. I call that a commodity, right? And again, if you have a 1031, go for it. We'll be your first biggest fan if you find the deal. We can also save a failed 1031 exchange. So we don't say don't do a 1031. We say, hey, go for a 1031 if it works, and it works, great. You don't pay us anything. If it doesn't work, hey, we can save that failed 1031. Or sometimes, like our client Craig, he had a bifracture 1031, a half 1031 and a half deferred sales trust. And he sold a $6 million piece of land in Texas. And so he found a perfect $3 million deal, actually two in two different states. And then the other boot that was left over, he was able to put into the trust. And so it's not a one size fits all. And those are some of the three biggest myths that people have to overcome. And then once they overcome it, it's like, oh my gosh, why would I ever do a 1031? And you go, exactly. You probably wouldn't, especially if you're looking for truly passive income, or you're looking for timing on your side. You're looking for some diversification, some liquidity. So yeah, those are the biggest reasons, and this is why we're here. We've dedicated our calling to really helping people understand this and execute on it.
It's amazing. I love it. And I need you to keep on doing that, by the way, Brett, because more people need to hear this. So keep going on shows, keep going on more shows, keep doing what you do, because when next time somebody goes into whether it's 1031 or whatever the option they choose, at least I like them to at least know that this was an option, right? I like to know, to make a qualified choice on what was going to work well for them, and not just go with the status quo because that's the way they've always done it, or maybe they thought, using your words, or this is too good to be true. Like, is this real? Like, it's real. It's decades of precedent in doing this. So, Brett, it's been amazing having you on this show today. How do people follow up and keep and review their personal situation with you or your team and connect and see if this is something that's right for them?
Yeah, really two places. You can go to capitalgainstaxsolutions.com right now if you have a qualifying transaction, which again is Bitcoin, business, real estate, or really any asset stock, public or private stock. And it has at least $1 million gain, Adam, and $1 million net proceeds. So it needs to be larger transactions. $1 million gain, $1 million net proceeds are large enough transaction to qualify. Now, if you said, Brett, I got one at $900,000 and I got another one at $500,000. Can I combine the two? Of course, right? You can combine, two to get to one. We don't want to combine five, or really even three or four to get to $1 million. But we want to look at that. It's a key factor there. So that's number one. Number two, if you want to get my book to learn about my entire story, it's called Building a Capital Gains Tax Exit Plan. We have Kevin Harrington from Shark Tank in the book. We have Tony Robbins, CPA, in the book, and a number of other really, really sharp and sophisticated commercial real estate and financial professionals. And it's a book that really tells my story of this and also walks through a lot of the bigger myths and help people overcome those things. You can pick that up on Amazon. That's Building a Capital Gains Tax Solutions Exit Plan. And the last place is brettswarts.com if you want to follow me on all my social media and check out the best 1031 exit plan as well.
Wonderful. And Brett, we're going to put those links in the show notes so that people can go and check out your content and check out your site, of course. And then for everybody listening, just so you know, again, those links will be in the show notes so you can check it out. Or if you're looking at watching this on the blog, then it'll be there as well. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And Brett, leave that website one more time. I want people, they were driving, they were busy, they're fumbling around. What's that website one last time? We'll end it on that.
Yes, capitalgainstaxsolutions.com, capitalgainstaxsolutions.com. Thanks, Adam.